Hi, I'm Kim Parmon, principal broker with Living Room Realty. As the Fed has continued to raise interest rates in an attempt to offset inflation, it has caused the housing market to become volatile. This volatility has given both buyers and sellers headaches and has some questioning, are we headed towards another 2008? Today, I have with me mortgage advisor James Adair, here to share some information, insights, and thoughts on these current market conditions.
Howdy, I'm James, mortgage advisor with Neo Home Loans here in Portland, Oregon. Neo's mission is not just to sell mortgages, but to use financial education to ensure people become successful homeowners.
Let's just jump right in, James. Understandably, folks are worried we are headed for another 2008. Do you think that's the case, and why or why not?
Well, the short answer is no. I do not think we're about to experience another 2008. And the reasons why I can't see that type of downturn are, first, the entire character of the lending industry has been transformed. The credit quality, the stability, and overall equity present in the United States real estate market is extremely high. The market could have a huge drop, and this would still be true. Plus, the amount of potential buyers, a lot, compared to available inventory, limited, creates a kind of floor for the market that I think will be durable.
Okay, so far so good. Any other thoughts on this?
A few, yes. Something that drives home buying is called household formation. And this is when people hit the age of marriage and family creation. And the average age of this formation that results in a home purchase is age 31. And the population of buyers right now that are in this 31-year-old age window are the tail end of the millennial generation, which is the biggest population boom ever seen in US history. And it's followed only slightly by the second biggest boom, which is Gen Z, right on their heels. And guess what generation was hitting household formation in 2005 and 2006? That's right. It was Generation X, people born in the 1970s. And this was also the first generation that came about during birth control, and as a result, there's a demographic dip of births in the 70s. So the real estate market was destined to see a slowdown in the early 2000s as Gen X showed up to carry that first-time homebuyer burden. And since market values are always pushed forward by the first-time homebuyers, and the generation showing up to absorb that entry-level house was significantly smaller than the previous generation, we would naturally expect some price softening. But this was also coincided with the Wall Street discovery of collateralized debt obligation products. And the appetite for these products required more mortgages. And the subprime mortgage industry was born. And we all know what happens next. The entire building industry was basically wiped out between 2009 and 2013 and has yet to catch up with the demand of these new demographics. The United States is quite underbuilt as a result of this.
All of us agents know that's true.
This was really exacerbated in 2020 when the millennial buyers peaked. Combining that with low-cost mortgages, it's almost the exact opposite of 2008. Creating multiple offer city. Higher interest rates right now are creating a temporary cool down in buyer behavior, but new home building is still years behind the curve. This is why what kind of feels like a market downturn is most likely a temporary mirage, and an opportunity for any buyer who wants to punch their ticket. Whenever rates cycle back down to the mean, we'll see buyers flood back into action. With these factors holding the market up, the tax-adjusted cost of borrowing compared to renting, even at today's rates, is still a smart trade. While it's true that it doesn't feel as obvious as it did in the last few years, buyers with the right plan, the right time horizon, and the right team in place will almost certainly be a success.
There's a lot of chatter in the market about how rates are going to go down soon, so buyers should marry the house and date the rate. Of course, rates may go down, but they also may go up. How are you making sure buyers are protected right now in the present moment so that they aren't banking on future rate decreases?
Well, the short answer is deeper education in the pre-qualification process. We explain the bond market, how mortgage rates are developed, the forces that are influencing the cost of borrowing, and then we make sure that we have a true affordability plan for the initial loan. We're going to help buyers understand where they can trim their current budget if need be, and also stay focused on the actual value of the property. Our mission is to make clients successful homeowners, and this goes far beyond simply locking a rate and closing a transaction. We're designed to help our buyers understand how the real estate asset and mortgage can support their long and short-term financial goals. We always imagine two possible future outcomes. One, rates improve and we can refinance into a lower housing expense, or rates continue to go up even further, at at which point you'll feel great about having locked in when you did.
I agree. Nobody can ever time the market, as they say. But rate increases have caused such big monthly payment increases in such a short period of time, some home prices have started to decline. In your opinion, why should someone consider buying now instead of waiting?
Well, the hidden opportunity afforded by this affordability shock is that the overheated competition of 2020 and 2021 has dramatically subsided. Being able to command the market as a buyer with regards to price reductions, closing cost credits, repair credits, and full-blown property repairs, that's all on the table now. If you were a buyer with a lower down payment who couldn't afford to waive the appraisal, this market is now open to you again. If you buy now and the market continues to decline, well, that's only a negative outcome if you also sell at that time. And I have a lot of faith that whatever price correction we're seeing right now will be relatively short-lived.
That's so true. I tell my sellers all the time that the value of an asset only matters when you go to sell it, balanced against what's happening in the market at that time. What are you personally doing in your business practice to ensure that buyers are making smart, long-term moves right now?
Just really taking time with my clients to make sure they understand the context of the larger market playing field. The global economy affects the bond market, which affects rates, which affects home values. Just understanding all their options and how leverage and tax advantage debt and a real estate asset will impact their family's balance sheet has never been more critical. It's not hard to find a lender that can get you a loan, but we think that this next level investment in our client's success is just a better way to do business.
Thanks, James. We appreciate you taking some time to share this information with us. Living Room is committed to providing you with as many resources as possible to help you make an informed decision. If you're ready to make a move, call us today. We'd love to help you find your next living room.